Good morning, Leaving California world. This is David Berry. I'm your host for Money Matters. This is episode 11. And guys, I got to jump right in. I can't believe it. A week ago, we had, our potential president get shot. And then yesterday, we find out that Joe Biden's not going to run again. I mean, life is crazy. Things are crazy. And, you made a good choice by watching our video and listening to our content because we share relevant stories that affect people that are leaving California. Sorry, I didn't mean to jump all that in there because without even saying good morning. But good morning, Terry. How are you?
I'm doing great, David. It's a beautiful day.
And Monty, things are happening fast. I mean, nobody knows what's going to happen tomorrow. And it is kind of it's not really scary times, but it's just, when you're making a big lifelong decision of leaving California and all this other stuff and all these other distractions with politics and people getting shot and people saying, I'm not going to run for president again. I mean, my goodness, what do you think, Monty? What are your thoughts with all this stuff going on and trying to stay focused and helping people get into their new home?
Yeah, it's another good example of what happens out there does affect what's going on in your home, but at the same time, you still have the same choices you had last week and the week before as we did this show to change your life and change your family's future by doing something. Now, Biden being out, does that change the markets? Not really, not immediately. There's nothing today, like the market didn't go nuts. We didn't see rates drop and we didn't see rates go up. They're pretty much unaffected. So it's going to be interesting, but it was always going to be interesting over this fall as we approach the election. What happens with the rates? We see this every 4 years. They tend to go down. They're setting perfectly up for that same thing again. And so my report out today will include several things, but yeah, none of it is Biden specific.
So basically, it's just like we give the same advice week after week. Take a deep breath. You don't have to worry about external factors. Worry about yourself. This is a step process. And by using professionals that Terry has put together, using our professional vendors that do relocations every single day, and Monty is certainly he's in the top 1% of lenders if you didn't know, and we're so lucky to have him. But, take a breath, understand that this is a multiple step process and you're not going to get all the steps done by tomorrow. Right, Monty?
Yeah, it really is true. Take it a step at a time, use an expert, talk to somebody that knows, that can give you some data and see what works best for you, because what works best for your neighbor is not necessarily going to be best for you. The biggest headline this week, I think, was the home builder sentiment that came out. We got that report, and so that was below that key threshold. It's an important caveat to say that there is rise in those construction projects. Last month too, we are seeing that. So all of this is signaling a slowdown in economic activity, which is what we've been hoping for, really, to move the markets. So that was specifically on the home builders and that confidence. The chair of that group is named Carl Harris. Mm-hmm. And so he said the 6-month sales expectation for builders moved higher, indicating that builders expect mortgage rates to edge lower later this year as inflation data are showing signs of easing. So even the builders are now saying, we know where this is headed. And so that's good for all of those people in the Leaving California group that are looking to move and buy a house.
And, Monty, I know you kind of just alluded to it, but you don't like me to put you in the corner here, but and use your crystal ball. But I don't want to beat a dead horse here. But I mean, maybe you could elaborate a little bit more about what your thoughts are as far as from a financial standpoint of what the next few months look like all the way up to the election. Yeah. And should people wait? Maybe they should wait until after because I'm sure their neighbors and their friends and their cousins are giving them advice right now. Everybody loves to give advice. But if you want advice, why not use a guy that's in the top 1% of lenders? So if we had to look into the crystal ball a little bit for our Leaving California members, what would you say?
Yeah, well, I would give one caveat and say the reason people might not want to talk to somebody like me is they might perceive that my goal is to push them into getting a loan because that's how I make money. The thing I would challenge that with is I'm not going to push you into a loan. What I'm going to do is show you what your current budget is versus what the budget would be if you bought a house. And then you can decide, what do you want to do? All of our decisions and our conversations are data driven. And so I'm not pushing anybody. I'm really showing them the data and seeing how open-minded they are to considering something that they hadn't yet considered. So yeah, it's hard when you're taking the person next door's opinion. So we want to stick with the data. And in that vein, I want to hit a few other things for everybody today, since we want to give you the information that's really going on in the past week. The next thing that we saw this past week was the retail sales. So that stayed flat in June. It was better than the outright decline that we really thought was going to happen. The sales in May were also revised upward from what they originally reported. And so that report came in better than what we estimated, but there's been growing evidence that the consumers are spending more cautiously in the face of this rising unemployment and slowing labor market. So we do see that the general public is making changes in their spending. The Fed is going to be closely watching those future sales reports, retail sales reports, because the strength of the economy will impact that monetary policy decision that they've got to make later this year. So that's something else we've got to watch, is how the consumers are spending their money.
Well, I really appreciate you sharing the fact that your neighbor, your cousin, or your aunt that's giving you advice. I mean, let's face it, our close friends are going to be giving us advice. But I think what you're really saying, Monty, is, be careful, because you have to, I believe that all the media sources and all the different places that they get the information, I think that's really the key. And that's what sets you apart, because when you're talking to somebody that just hears general statements and then they try to reiterate it, as opposed to you're not really talking about, well, you don't use words like I think or I'm not sure. You talk strictly facts. And it's great because I see you when we do these shows. You're looking right at the screen and you're actually looking at the facts. So can you just touch on that when you're talking to somebody that maybe they're not an expert and they're giving their opinion? It might be important to say, well, where did you get that information from?
Sure.
Is that something that's valid?
Yeah, I definitely think it would be valid. One question I like to ask people is, what experience do you have with whatever we're discussing? So if it's moving to another state, what experience do you have with that? That would be a good question to ask your neighbor in California who's saying, don't move. Well, what experience do they have with the thing that you're considering? If they have no experience in that, then I would say they're not very qualified to talk about it. So in that same effort, we want to keep with the data so that you can decide. One of my favorite ones I bring to y'all every few weeks is that unemployment data. And so what we got in the past week was the initial jobless claims again, and those hit a 5-week high. 243,000 people filed new unemployment claims in the latest week. Right. That's marking a 20,000 increase from the previous week and tying the highest level since early June. The continuing claims, people that are continuing to claim unemployment, that rose also by 20,000, and that's at 1.867 million people are receiving unemployment right now after filing that initial claim.
Yeah.
So what's the bottom line with that? What does it mean? The pace of these layoffs continues to move higher, as does the number of people who are already collecting benefits. Plus, this latest initial jobless claims reading was an important real-time report, because it includes the sample week that the Bureau of Labor Statistics, the BLS report that we're going to see. They're going to use that in modeling for their job growth estimates for the July jobs report. So that's just one component, true, but that high reading of 243,000 of initial unemployment claims could point to weaker job growth when that July report is released on August the 2nd. There's been a lot of, this is headline right here, there's been a lot of growing calls for the Fed to cut their benchmark Fed funds rate. So you're starting to hear people say, I had somebody last week, somebody really reliable, say that it's 100% chance of a rate cut in September. And so there is a lot more people jumping on that bandwagon and saying September the 18th, when the Fed meets, they're going to cut because of these signs of cooling inflation, rising unemployment, softening job market. The labor sector data released between now and then is going to play a pivotal role in that decision. But yeah, this could be huge. Could be the turning of the Titanic around.
Monty, you've shared this on several occasions, but again, maybe somebody has never seen our show. So I want you to talk about, and I didn't have this on our agenda today, but since you brought it up, and I think it's so important, does it matter if it's a quarter point, a half a point, or a full point? And you shared that sometimes when they make a rate reduction, it doesn't even affect the market. Can you touch on that?
Yeah, it can. So what I'm hearing more right now in the past week is people fearing that a 25 basis point rate cut by the Fed on September the 18th is not going to make a difference. That, well, it's just 25 basis points. Yes, it is. However, right now there's a lot of fluff in the rates. The market has priced in a lot of extra. And so it's not just that 25 basis points is going to drop, and that 25 basis points doesn't correlate exactly to what your interest rate's going to drop to. It's also the fact that the fluff is going to go down. Probably won't go away entirely, but the other thing, the reason I use the Titanic metaphor is think about the fact that we've been sailing towards icebergs. We are moving in a dangerous cold direction. When they cut those rates, that's really turning that ship around and moving it back towards what I'm calling tropical waters. Now, maybe not the tropical paradise that 2020 and 2021 was, but still moving back the right direction. So the way the banks are going to see it and the markets are going to see it, when they do cut it, it means the sun is coming out. The day is approaching, the night is over. It will really move us into a good space where anxiety will drop. So that's why that is so important. And think about the timing of this with the election. If that happens in September, then you got Kamala Harris and Donald Trump both using this as fodder for their campaigns to say rates are going down and I'm helping you and I'm controlling the economy so that it helps the general public. So it should only pick up momentum and speed through the fall.
That's great.
The reason I'm sharing this, and that's so important for all of the listeners, is you do not want to wait till then. This is the last call. These next few weeks, I'm going to be making a very adamant, imminent prediction that you need to go ahead and move now. You need to buy now, because you don't want to get caught up in the trampling that will happen when the rates start going down. It's just going to change. It's going to be a lot harder to get a good deal, be able to move comfortably. So I really encourage you, make the decision now and get ahead of the wave of the herd, everybody moving after rates start going down.
Well, you know, it's funny. We're so blessed to have you, Monty, and all of your advice is great advice. And it's not, you never ever say do it tomorrow, but you say really take a look at it now, because you may regret. And that's the thing that we want to do. We want to educate our members. We don't want you to regret. And, you know, we always have Terry here on our show, and it's so great to have Terry, because Terry stays so in tune. He stays in tune really well with Florida, but he stays in tune extremely well with California. And he shares some things that are going on in California for our members to really think about. So what's going on in California this week, Terry?
One thing I want to talk about today, David, is the fact that if Trump wins the election, life is still going to be challenging in California. Home insurance rates are still going to keep going up 10, 20, 30% per year. Insurers are still going to keep leaving the state. Taxes are not going to drop. We've heard for years that California has a $1 trillion unfunded pension liability because of the massive benefits they give state employees, teachers, and everyone else when they retire. I just saw that it's up to 1.5 trillion unfunded pension liability. California cannot print money. They have to balance their budget every year. They have to pay off their responsibilities. That's going to come from somebody. It can only come from the taxpayer. So I think life, regardless of whether Trump or Harris wins, you're going to still see some serious challenges in California. And it's not just from a financial point of view. It's also from a social point of view. They're going to continue to embolden the fringe to pass laws that benefit the fringe. And I'm not even going to mention who the fringe is. I think everybody knows who that is. So if you're not happy in California, as Monty's been saying, don't wait until the getting's good as far as interest rates dropping and things like that. Get the process started now. Reach out to Monty now. Get your financial ducks in a row. Even if you're leaving a year, 2 years from now, let's start getting your financial plan in order. So when the time comes, you can exit comfortably out of California. The other side of it is don't forget, Monty's got that program to where if you want to buy today, you can still own your home, your California home today, and buy today, turn it into a second home and a rental home, that kind of thing. But you've got a lot of tools in your tool belt available through Monty that can help you make that transition away from California and to a much more comfortable life. The other side of it is, let me just throw this out too. If Trump wins, California is still going to be a tough place to do business, a tough place to make a living. They're not going to lower taxes just because Trump is in office. In fact, they may say, oh yeah, watch this. But you're going to move to these other states, like the southern states that are very much pro-business, pro-capital, pro-middle class. You can live a whole lot better life living in those states. And let me give you one more example. I just saw that Florida home insurance rates have stabilized significantly recently because the Florida legislature, reacting to the increase in rates, has removed a lawsuit loophole that allows frivolous lawsuits to come against home insurance companies. And so rates have stabilized significantly. In fact, 9 Florida home insurance companies have actually requested a rate decrease for this year. So rates have stabilized for insurance. For those who said, I'm not, just like California's been doing for years now, well, we're not getting that in Florida. Rates have stabilized, and we're seeing that for the most part, rates are not going up for home insurance. And if we do get they were predicting 25 named storms this year. So far, we've had 1 or 2, I think 2.
Yeah.
Right now, the tropics are very still. Now August and September are big hurricane years, or months for the hurricane season. We'll see what happens, but so far, this Sahara dust has been tamping down all of these storms that have been coming across the Atlantic Ocean, and it was very quiet out there in the tropics. So who knows?
You know what, Terry? Let me say this, and this is about as political as we go. We never really jump into politics, but I think it affects everybody so much. It almost sounds like you're saying that if Harris wins, she was the one that was behind a lot of the policy changes in the way that life is in California anyway. So her goal would be to make America like California. And if Trump wins, then I believe California would do as much as they could to continue to go in that direction because they want to be different than Trump. So either way, is it a losing proposition for Californians, whoever wins?
Well, if you're happy in California, by all means, stay. If you're not happy with the direction California is going, it's not going to stop no matter who's in the White House. So if you're not happy with the direction, then you certainly want to call Monty, start looking to one of some of our preferred realtors who can help you, give you advice on selling your California home, but also talking about why you should consider other places in the country and what places you should consider.
And by the way, I'm glad you brought that up, because to our members out there, we are working on incentives. We're working on different programs that we can offer to you so that you're not only using an amazing realtor and an amazing lender, but I think you really need to give us a call, and then we can go over what we're offering and we can have a personal conversation. We do give free advice, and Monty is more than happy to go over what it looks like to leave California, what your budget is, and to share some really, really important things. And the professionalism that you would get from Monty is it's better than anything, as opposed to just calling someone random up, because Monty deals with this every day. I know we're getting late on time, Monty. Do you have any other things that you wanted to share with our audience?
Just that this week, the biggest thing we're watching is going to be Friday. We're going to get the Fed's favorite inflation measure, personal consumption expenditures. So that should be an exciting thing to report out on Monday about.
Okay.
Pray it's what they predict or lower, because then they'll lower rates in September and we're off to the races. And by the way, we know, Monty, you and I and David know, if that report comes out favorable, rates are going to drop on Friday. They're not going to wait until the Fed drops rates. They're going to say, well, the Fed's going to start dropping rates, so interest rates are going to stop dropping, which is going to bring a whole lot more people into the market, as we've talked about before. Yeah,
we've already seen that move towards rates are getting better right now. So yeah, you
Awesome.
Better jump on it.
That's fantastic. And again, I'm David Berry. I'm your host, and this is Money Matters, episode 11. I'm going to ask you every week from now on, because we're giving this from our hearts. I mean, we really want to give you the good information so that you can have a stress-free relocation and welcome to America. So if you would please hit that subscribe button on our YouTube channel. We've got over 2,000 followers, and that's growing like crazy. We're coming close to 300,000 members in our group. And we just want to keep sharing the message. So make sure you you comment. And if there's something that you want us to talk about in our next show, just comment and let us know. But again, I'm David Berry. You can reach me at Lasvegas at davidberryrealtor.com. And if you need Monty's contact information, you can message me, or Terry will get you in connection with him right away.
It'll be in the comments.
What's that?
His contact info will be in the comments.
That's right. And we hope you have a great week. We'll see you next week for episode 12. We'll talk to you soon. Take care.